On behalf of Capital Inc., I'm Nicholas Bornozis, and I would like to welcome you all to this panel discussion session. This panel is on the topic of offshore wind in the Jones Act space. Offshore wind is an area of activity that is very much developing, big opportunities and growth potential, and we are really privileged to have with us a stellar panel of major industry participants. I will let Alice Colarossi from Reed Smith, who is going to be the moderator, to introduce our panelists. I'd like to simply say thank you, Alice and Reed Smith, for moderating the panel. And of course, thank you to Joshua, Eleni, Robert, and Jeff for joining. And Alice, the floor is yours, with my thanks to all of you.
Thank you so much, Nicholas, for the introduction, and good morning and welcome everyone to the Offshore Wind and Jones Act panel. So yes, I have four great panelists with me today to discuss the Jones Act and the US offshore wind sector, a very interesting and timely topic. Just in the last year, there was an amendment to the US Outer Continental Shelf Lands Act and several CBP rulings that have clarified the extent to which the Jones Act applies to offshore wind support vessels. This is all part of the landscape for an industry that is really emerging and already booming in the US, as our panelists will tell us. So I'd like to give them the floor and ask each of them to introduce themselves and their companies and tell us just a few words about what they do in the US offshore wind sector. Joshua, would you like to start?
Sure, no problem. Good morning, everyone. My name is Josh Shapiro with Liberty Green Logistics. Liberty Green Logistics is a consortium approach to providing a supply chain for offshore wind, where the Liberty Group is co-partnering and co-investing with our consortium members for end-to-end supply chain solutions for offshore wind.
Thank you. Eleni, could you please introduce yourself?
Good morning. My name is Eleni Beyko. I'm the Senior Vice President for Offshore Wind at Great Lakes Dredge and Dock Company. I joined GLDD almost a year ago to lead the entry into the US offshore wind market. And it's been a very exciting ride over the past year with a lot of great administration support for offshore wind. And as a company, we've accomplished a lot, including designing and contracting to build the first US Jones Act subsea rock installation vessel in the country. So I'm very proud of what we've accomplished in the past year. Thank you.
Thank you. Jeff, how about yourself?
Thank you, Alice. My name is Jeff Andrini. I'm the Vice President of Crowley's New Energy Division and heading up the offshore wind business. We are a full service turnkey provider for offshore wind, participating in the transportation of components and foundations to assist on the installation, the ownership of terminals for both marshaling and O&M, the build out, the operation of SOVs and CTVs, and then finally providing training programs, workforce development with the assistance of our GWO partner, Relion New Tech.
Thank you, Jeff. And last but not least, Robert.
Thank you, Alice. Good to be here. My name is Robert Galinski. I'm the Offshore Wind Director for DNV, looking after the Americas. A little bit about DNV. We've been involved with offshore wind since it became a scalable concept back in the 80s, and we are involved in over 97% of the world's offshore wind projects. DNV is also market leader in class of SOVs with over 80% market share, and we're the first class society to develop standards for WTIVs as well. We've got 125 years in the US with over 2,500 people strong, and we're very proud to be able to be involved in this local market as well. And good to be here.
Thank you, Robert. So my first question is, in early 2021, as you all know, the Biden administration announced a very ambitious goal of deploying 30 gigawatts of offshore wind by 2030. I believe that we are currently nowhere close to that number, but there is a very large number of offshore wind farm projects that are at different stages in the bidding and the approval process, especially along the East Coast. So my question is, can we meet the Biden administration 30-30 goal? And maybe Robert, you can take this one.
Sure, it's a good question. You know, in my view, the 30 by 30 is a sign of the energy transition that the US has committed to. Mm-hmm. And it's also an important catalyst for electrifying key services, right? I think we all agree on that. The pace of the progress since the target's been announced has been very promising. And we certainly see commitment across the entire value chain to see this through. So that's the good side of the news, right? The biggest challenge that I see is our ability to effectively commercialize offshore wind. So subsidies, of course, play a big role, but ultimately I expect investment from private equity firms and from within key stakeholder organizations as well to be driving the capital injection. And this is, of course, already happening with developers and ship owners investing in a major way. The regulatory framework related to leasing and permitting is another kind of area that caused some delays. But with more leases coming online this year, I'm sure that the bidders and the regulator alike will be keen to streamline this process. So having said all that, as long as the commitment from the federal government and private companies remains the same, from my point of view, I'm very confident that the target will be met in time.
Well, that's great to hear. And look, you've touched upon several challenges, and we'll discuss those challenges further during this panel session. I guess the first one that I wanted to discuss with everyone today is the challenge that are posed by local content requirements and the tension between, that strong federal support for offshore wind projects and the local content requirements that can be challenging, especially when they are applied to vessels, because vessels are regulated on a national basis and local content rules may not be easily achievable. So I wanted to hear from the panel on how the industry is addressing this challenge, the local content requirements challenge. And any views you have on this question.
Sure, I guess I'll try and jump in on this. So I think local content can be broken down into different verticals. And so, for example, we can start with manufacturing. So by creating manufacturing facilities in states that are having offtake and power purchase agreements for offshore wind, creates firstly development and economic activity, and thereafter local and sustainable jobs at those manufacturing facilities. Connecting that to waterfront terminals, which is an essential part of the offshore wind supply chain, that creates more infrastructure development opportunities and then furthers shoreside stevedoring and various specialized and skilled jobs for labor, which, as we've seen, a direction is, at least the mid-Atlantic, is turning towards unionized labor. And then lastly, you've got the assets in the waterborne assets, and that local content gets a little bit more complicated because you have regionalized areas where shipbuilding capabilities are greater than others, and you can't have every vessel for each and every project built in the specific state of that project. So I look at that local content as more of a specialized and regionalized area. But it is certainly possible to achieve local content through these different verticals throughout these offshore wind farms, which will create a ton of economic activity in the states and regions where this wind is currently being developed.
Thank you, Joshua. I was hoping maybe to hear from Eleni on this topic because she mentioned in her introduction that Great Lakes is in the process of building the Jones Act vessel. Have you been dealing with local content issues, and can you tell us a bit about that?
Yeah, absolutely. Well, I see local content as really an opportunity, just like the states do, to increase economic activity in the states. Specifically, we are creating economic activity with shipbuilding, for example, in the state of Pennsylvania. The Philly shipyard is starting to construction on our new vessel. So that constitutes local content, absolutely. When we start operating in the East Coast, depending on the project and the state where the PPA is from, we would be doing the rock supply chain from that particular state. For example, the quarry that produces the rock for the rock installation, the logistics, the stevedoring, the loading, all of this is creating a lot of local economic activity in addition to servicing the vessel, the fueling, the bunkering, and everything. There's also other related activities that will happen in the States. So I do see this as a big opportunity for the States to gain from all of this economic activity that offshore wind will bring to our shores. We welcome it, and we're trying to support it with our own investment in this market, and making sure that the states participate and we utilize local content as much as possible. Yeah.
Let me add to that real quick. I agree with what Josh and Eleni are saying, and we are in the midst of several contracts right now, one with an SOV where local content is at a premium. And with our vessels, the tugs that we'll be using to be able to transport components and foundations and secondary steel for installation, working together with the unions, we certainly envision having local mariners on board those vessels. However, I look at it a little bit different. I would much rather see a more domestic content than just local. Having domestic content is going to make the process that much more economical and efficient for the entire nation. The ability to pull in folks from the Gulf of Mexico who have a tremendous amount of knowledge in offshore operations, something that's very similar to the Power Act that they have in the Mid-Atlantic, where the states of Maryland, Virginia, and North Carolina are all working together in order to provide for offshore wind. That's what I would like to see, and I think that's what the industry needs in order to be more efficient and in order to be more economical. That doesn't mean that we won't support local content. To the contrary, we do today, especially with the growing workforce in New York and in Massachusetts and also in the Mid-Atlantic. But it's our opinion, and I think a lot of others, and I'd be interested to hear some of the comments from perhaps Josh and Robert and Eleni on that whole domestic content concept, because I think that's the way we should truly be looking at this, instead of very singularly by state.
Yeah, I don't disagree. I do think in the first instance, when it comes to the manufacturing facilities, that you can't put a windmill blade manufacturing facility in each and every state. And so we have to, as I mentioned the word, more regionalized. But I wouldn't disagree with Jeff about, we also need to recognize and look at our workforce and look at what expertise we have in the United States, oil and gas for sure in our United States Gulf. We have a lot of assets and resources there in terms of our power and workforce. We also are this world's second largest onshore wind producer behind China. And there's an entire workforce there that's not necessarily from coastal states that's accessible to us as well. So when we come to this local content, or as Jeff is describing, domestic content, this is why I personally break this down into verticals between manufacturing, ports and terminals, marine assets, and then the workforce at large must be domestic. And of course, there are many efforts going on in workforce development to bring that workforce to these wind farms. in addition to where Crowley is working with different entities, Liberty Green is also working on developing an offshore wind certificate course online, partnered with SUNY Maritime University in that to help bring that workforce to become local content, because these individuals will relocate. So I would definitely agree with where Jeff was going about using the resources that we have existing in this country already.
Thank you, Josh, and thanks, Jeff. Eleni, would you like to react to that concept of domestic content?
Yeah, the issue here for people who are not fully familiar with it is that the way local content is defined in the offshore wind market is more like statewide local content. For some of the companies that are marine-related companies like ours, the vessel goes from state to state to state. So we would like to benefit from building a vessel in Pennsylvania in the Philly shipyard, and we would like that to be considered domestic content for these projects, regardless of whether it's Massachusetts or Pennsylvania or New York in this case, because the vessels travel all along the East Coast. So I agree with the point as well. But I think the biggest carrot here is to create economic activity in all of the eastern states, in the East Coast states, and how we account for it as local or domestic content comes next, but creating the activities is the carrot and the big goal here.
Sure. And so you just mentioned all the eastern states, and I think it's my understanding that the local content requirements have been especially applied on the East Coast, unless on the West Coast. And I guess this links to, another area I wanted to discuss with you is like the different pace at which the offshore wind industry is developing in the different coastal regions in the United States. The fact that the East Coast seems to be, is clearly, developing much faster, but the West Coast might be catching up. So my question here is, should we expect the West Coast to catch up with the East Coast in a close future? And what explains the somewhat slower development of the West Coast so far in that sector?
Awesome. I'm happy to take that.
Sure.
So we are very much involved in what's going on the West Coast. I think, as most people know, Crowley was founded over 129 years ago in San Francisco. So we have a very unique interest in seeing the success of offshore wind, not only in the state of California, but Oregon, Washington, and Hawaii as well. The challenges that we see on the West Coast is, one, you're not installing fixed, you're installing floating. And as I think most people are aware, that's more just in a project stage right now than anything else. The other thing that's very interesting is, on the East Coast, you have, as I'm sure everybody is aware, anybody who has a postage stamp of terminal space wants to raise their hand and be involved in O&M or some level of marshaling. And that's not the case on the West Coast, where there's really only 4 designated areas right now. And all of them have their challenges, from Port Hueneme to Diablo Canyon to Eureka to Coos Bay. But we ourselves see a tremendous opportunity to be able to come in and be a terminal provider, similar to what we're doing today in the city of Salem, Massachusetts, with our anchor tenant, Avangrid. We also see another opportunity that I think is not being talked about a lot, but it's the design of the anchor handling tugboat that's going to be needed with some type of alternative fuel source as a power. And so that's the areas that we are currently attacking right now, and feel that we are really on the foundation of building West Coast wind, and also, eventually using that same template for the Gulf of Mexico as well. And just adding a little bit to what Josh was saying on the workforce side, being able to establish that, that training center, the workforce development, not only in the state of California, but in the state of Oregon, that's going to be required to support the floating wind market.
Yeah, I would add as a general summary from a West Coast perspective, deeper water comes with bigger challenges. We're talking about 2,000 feet deep off of Morro Bay. And it also comes with some higher costs. The good news in all of this is that there are technical developments going on now in these demonstration projects for floating wind that are indicating that they could meet the price levels targeted by California for its energy pricing and offtake. And that, I think, is another factor that we have to think about here. It's a slightly different business with different assets being used for the floating side of the business. And of course, that has a different cost structure. And so at the end of the day, this all becomes about the efficiency of energy that American citizens are consuming and the pricing of that energy being affordable enough. And so I think that plays into how the West Coast is coming, but it's not where the East Coast or Mid-Atlantic region has been because it's a slightly different performance product.
And to Josh's point as well, so I wouldn't really call it catching up. It's just a different landscape on the West Coast than it is on the East Coast, and it requires a different approach. If you take the bottom fixed offshore wind, on such a scale as we're seeing now in the US, this is fairly new, but we can bring in lessons learned from Europe and other places in terms of floating wind. It's becoming more mainstream, but we don't have as much experience with it yet. So, to that point, those projects will have to be optimized quite quickly. The designs will have to be optimized quickly, and the O&M activities will have to also be adjusted to suit. And to Jeff's point about anchor handlers, for example, you talk about anchor spread and mooring lines and shared anchors, etc. It's actually a very complicated installation process, so it will have to be looked at in detail. And really, now with the leases expected mid-year on the West Coast, we're already seeing yards and ports and manufacturing facilities gearing up for that. And also, developers and vessel owners interacting with the local ocean users and the local population as well to make sure that everybody's comfortable with the concept that's going to be developed there over the next few years.
I agree with everything that's been said so far and augment that there needs to be some more work on the technology side for the floating offshore wind. And that will allow the economics of the floating offshore wind to make sense for commercial development. And specifically, for example, the technologies that are being looked at right now may not be just wind, may be a combination of wind and wave energy to increase the output, the power output from each platform. So there is some technology challenges, and once these are resolved, then the economics will start looking better, and it takes a little bit of time to get to that point. Even Europe is now increasing their floating offshore wind farms and getting into new technologies and new frontiers. Personally, I have done a floating offshore wind technology program in the North Sea a couple of years ago. So there is still quite a bit of work that needs to be done for the economics to be where they need to be. Yeah.
Thank you. And so far our discussion had been very focused on the US market, but both of you, Eleni and Robert, in your latest interventions, you refer to the European markets and the fact that there's lessons to be learned from them. And I guess this connects to another topic that I wanted to discuss with you, which is the important role that seems to be played by European American partnerships in the US markets. And those partnerships combine, American expertise and Jones Act compliance with European experience. In your views, are these partnerships built to last, or is that a transitional phase that is due to the different pace and development between the US and the American and the European markets so far in the offshore wind sector?
Maybe I can weigh in quickly as a third
Sure.
party here. The way we see it, the current partnerships are basically forged not only due to common goals, but also very often due to common values. So I fully expect that these continue to flourish and do so very strongly over the next decades. The European developers have made it very clear that they are here to stay, but stay whilst contributing to the US economy, right, through investment and engagement of local workforce. And we see the same partnerships on the vessel side. There's a lot of European ship owners wanting to enter the US market, and therefore they create these partnerships with the well-established US companies. But some of my fellow panelists here, of course, will be better suited to elaborate on this than I can, but I certainly see positive and long-lasting collaborations there.
Yeah, I'll echo what Robert is saying. I think as everybody knows, Crowley has a partnership with ESVAT, who is today the #1 provider of SOVs in the UK and in Europe. And that was a strategical relationship. And as Robert mentioned, they aligned perfectly with Crowley's values and culture. That was the main thing that we looked at when we got started in that relationship. It has been more than just for us an opportunity to get together with somebody who has the technical expertise in being able to build, design, and operate a vessel. It's also paved the way for other relationships that we didn't have when we got started in this business a couple of years ago. I think slowly over time, there's going to be this level of transition that's going to come from Europe over the United States. But I do agree with Robert. We very much hope that the relationship between ESVAT and Crowley continues for many, many years ahead as we look to design O&M SOVs in the marketplace. But I truly believe eventually, and I do think we need to take more of a leadership role as we move on into the future, be that with vessel design, be that with training, workforce development. A lot of that today is in Europe, but once you get those lessons learned, we should be able to take the leading role moving forward in the development of offshore wind in the United States.
So we have at Liberty Green a slightly different approach, although I agree with aligning on values and that there will be some transition towards a dedicated American vertical of the business. Liberty Green Logistics is a consortium business. So we currently have 15 consortium members ranging from unionized labor straight through to European entities that are very active in the offshore wind business, as well as one individual Asian conglomerate active in wind. And so for us, it is a co-partnering and co-investing approach where we are completely aligned with our consortium partners and make investments together in different verticals of the offshore wind supply chain. We're hoping that leads the vertical to remain in place for a long period of time because we're aligning our interests at the beginning. We also have a structure in our consortium where it is a fee-less consortium. So it is free to enter upon invitation and it is free to exit. And therefore partners can come in and out for different projects depending on their business outlook or their expected return profile.
Thank you. Look, it's great to hear about all this alignment between American and European interest in these partnerships. I wanted to also talk about the differences between the European and the American markets and what we do differently here in the US. And I guess one aspect is that very much because of the Jones Act, in the US, offshore wind projects tend to be structured around the use of Jones Act qualified feeder vessels, which bring turbines and components from the shore to installation vessels. And this allows the use of non-Jones Act qualified installation vessels, which do not move and remain offshore. And I guess on the other hand, in Europe, it is more common to use installation vessels that both carry and install the turbines. So what people refer to as the US feeder solution, in your view, is that temporary, or is that a viable long-term alternative to the use of Jones Act qualified installation vessels to both carry and install the turbines? And of course, the background here is that today there is no Jones Act qualified WTIV installation vessel.
Could I kick us off again? Because I know that I'm sure there's more details, but from a general perspective, for an existing WTIVs in combination with a Jones Act feeder option is certainly a proven alternative, right? We've seen it being used already. But I did say on other panels, and I stand by what I said, is that for that to be a viable option, the cost of construction and complexity of the feeder design needs to be controlled. Because, in addition to being able to bring a foreign flag installation vessel, you actually have to be, it has to make sense to build these feeder vessels. I have seen the appetite for Jones Act installation vessels dwindle a little bit in the light of the feeder option being quite well established. This is, of course, there's no Jones Act installation vessels capable of installing the size of turbines we're talking about. But I think as more projects apply the feeder option with success, we will see that become more mainstream as well. The cost of a Jones Act installation vessel is a major issue for vessel owners, and without long-term contractual commitments from developers, it's a very high-risk investment. On the other hand, the demand for the installation vessels globally is on the rise as well. So we shouldn't assume that whenever we're ready, we'll have our pick of a foreign flag installation vessel to come in and just do the installation. So I think establishing a local Jones Act fleet of installation vessels is important, but I would be more conservative on the numbers of these vessels being built this decade than I was in the past.
I would agree with everything that Robert said. I've seen estimates of up to 5 to 6 WTIVs, and I think that's rather excessive at anywhere between $500 and $600 million. And as Robert accurately pointed out, with really no guarantees on contracts attached to them. I think, as everybody is aware, we are one of the primary feedering companies in the United States. The fact, that we have the majority of the tugs and barges puts us in an advantageous position right now. We feel that the process can be and will be successful. We've been very fortunate to already have a couple of jobs that we have contracted and we'll get started with in April of 2023. I also agree with Robert that people are waiting to see whether or not it's going to be successful. And if so, then the next step will be others will jump in. And that's when you'll start seeing the capital build up. But right now, even ourselves, we are standing pat with the amount of equipment that we have and really looking to see, how this plays out, from 23 into 25 and 26. And hopefully everything is successful. And then other equipment will join into the marketplace. And that could be, it could be tugs, it could be barges, it could be an entirely different solution. But there will need to be more assets, rest assured, or we will, as a country, run out of equipment to be able to help do the installation by 2025, 2026. And then getting back to Alice, your original question about 30 for 30, that won't happen.
Absolutely.
So I would pick up on that. I think, the biggest thing that we've seen in the marketplace is a pricing gap. Expectations of financial commitments without secured contracting for a $500 million asset become extremely hard for an entity to finance, let alone be interested in. And I think that as the industry matures, we will see hopefully financial pricing potentially become more competitive, but a bit more alignment between private companies and developers and OEMs of what their expectations are and what they're willing to pay, given the cabotage laws of the Jones Act here and what the construction costs are of these assets. With regard to the barge and feeder solution, on the feeder vessels, building new feeder vessels, we see the same pricing gap today. The barge solution is just that much more competitive in today's current landscape. And that, I think, is one of the reasons why it's being pursued aside from availability. But lifting from a moving barge out at sea in the northeastern part of the United States with the turbine sizes that we're talking about and the weather conditions we've experienced has not actually ever been done. And so I think for the initial projects where Crowley and others are involved, this comes down to a calculation of viability versus feasibility. It is certainly viable to do it. It's a question now of feasibility, and this really is the demonstration of the direction that we're going to take in the initial years of how this is going to happen. But Jeff's point can't be understated. As these wind projects pick up, there needs to be more assets. It's a mathematical certainty that we're going to need to build out this fleet. And so if you just take WTIVs, for example, with 17 gigawatts in the pipeline, which is in control of approximately 7 developers, if one developer was to award 3 to 4 gigawatts to one entity, that is enough to maintain operational employment on a WTIV for 4 to 5 years. So when we start to think about that, that gives that financial certainty, which would allow an entity like a Crowley or a Liberty to go out and contract for these types of vessels at these high asset prices. And we haven't seen that certainty in the market. And that's why I think you've seen a big pullback in the Jones Act WTIV investing profile.
Mm-hmm.
One more thing just to add to what Josh is, actually a couple. I would add further, even from a barge aspect, there needs to be some level of commitment from multiple projects in order for a barge and a tug to be built and be viable. And the other thing, and this actually goes back a little bit to the whole concept around local versus domestic content. To be clear, not every port is also going to be able to accommodate a WTIV. So you're not going to be able to get a WTIV through the hurricane barrier in New Bedford. There's going to be challenges in getting underneath the Verrazano Bridge in New York. And so one of the reasons strategically that we got involved in the Port of Salem with Avangrid was the fact that there were no restrictions. There's no air draft, there's no water draft. You can get a ship there, you can get a WTIV, you can get a tug and barge. So there's a lot of different factors that play into it, but I agree wholeheartedly with what Josh is saying, is that right now, the amount of capital and the amount of commitment from a contractual side is like this. And until we, close that gap, we're going to continue to have these questions and concerns about are we going to be able to keep up with the equipment needs, and are we going to be able to keep up with the installation that's going to be required, that again goes back to this whole concept of 30 gigawatts by 2030.
Thank you. We're getting close to the end, and I want to have a chance to ask the questions that were asked by the audience. And I see 2 questions, well, the third just popped up, but the 2 first questions that were there, one, and I want to connect them both. One was about, so the question was, are there enough ships to support the expanding offshore wind industry? And do you have an opinion on how many ships will be built in the years to come? And we've already discussed this in a way. The other question was on oil and gas, on whether you see working with oil and gas services companies in terms of building and servicing offshore wind installations as an option. So I think the way to connect these 2 questions is, I think this shows the potential or the 2 options, which are relying on new builds and relying on retrofits, and the possibility of retrofitting oil and gas support vessels for the offshore wind sector. Which role do you see retrofit vessels playing in the future, and especially, I guess, what's the potential of reusing oil and gas support vessels in the offshore wind sector?
Let me take that real quick, Alice, because I'm sure that Robert's got some things to say about this as well. But one of the things that I thought was really exciting for 2021 is the fact that that Siemens awarded a construction SOV contract to Auto Candies for three separate wind farms. That's the first indication that potentially the OEMs and maybe even the developers recognize that that the United States does have sufficient assets if they are retrofitted properly with a walk to work and other pieces of equipment that need to be added. And so this will be a key test, not only for the oil and gas industry in the Gulf of Mexico, but in the United States. If this works, then I think it helps and it becomes much more economical and much more efficient than trying to build brand new. Because you're not going to build a construction SOV for a one-year project. The same thing with a CTV. You need to have those existing assets employed here in the United States to make that an efficient model.
Thank you, Jeff. Were there any other reactions to that question?
I do have a few thoughts. I think Jeff makes an excellent point there. I do think that existing vessels could certainly fill the gap, but I would say up to a point. And the reason why I say that is that when you look at the existing fleet, offshore vessel fleet, they can certainly support in both commissioning and operational phase. But the retrofitting is what I'm concerned about in terms of the actual cost and whether it's cost effective for the owners to invest that much money into something that they'll have to likely continuously look after and upgrade as the requirements from the developers kind of expand, particularly on the emission control of the vessels. I mean, walk-to-work systems, extra accommodation, that's certainly things that we can accommodate. But experience from other areas, at this stage is there's probably more appetite in the future for tailor-made vessels because of that emission control reputation that the entire value chain is pursuing. So, I would say that the time window to utilize conversions is probably limited to maybe 2 to 5 years, unless there's owners out there who are willing to invest more than your average retrofit capex budget to invest into it. Because as the renewable industry aims for significantly less emissions over time, those new vessels will have to come in with new technologies, and effective complexities like battery hybrids, for example, ability to recharge on location while idle and so on. Those are all operational aspects that may be challenging for existing vessels. But as I said, I'm not closing the door on that because it really depends on how proactive and how willing the vessel owners are to invest in their existing fleets as opposed to building new vessels.
Just one more thing to add to it would be that let's keep in mind that we're competing with international vessels in terms of technology and efficiency and productivity of the vessels that work in these offshore wind farms. So anything that doesn't meet the specifications and cannot compete in itself is an issue. So retrofitting with something that's at the end of the day is not going to be the latest technology may not be as competitive, both from an emissions standpoint and from a technology and functionality and workability standpoint. So those are issues that need to be considered. I'm not saying that retrofits cannot happen, but they need to be selective, and the end result needs to be competitive in the marketplace.
I'm glad you said that, Eleni. That's actually where I was going to jump in quickly and say we also have to look at the emissions side of the engine. And it looks like not only do I agree with the panelists, but it seems like in short order, the use of existing assets is a short-term solution. And we're looking at a 30-plus-year industry here for at least phase one of this industrial build-out. And we need to have vessels that align with the emissions targets during that phase.
Right, thank you. So we're getting very close to the end. We had two questions from the panel that came. One was on the workforce, on the training of the workforce, and the other was on the port facilities, and whether it needs to be fortified. We have only 1 minute left, so I don't know if anyone wants to add something in this respect, or otherwise we will just conclude. Any final
We
thoughts?
need more workers. We need way more workers. And as far as what was the last one, Alice, terminals?
Yeah.
Yeah, we need more terminals too.
All right. Well, this will be our final words. Thank you very much for the great discussions. Thanks, everyone. And yeah, this concludes our panel.
Thank you for inviting us.
Well, I'd like to say from my end, really tremendous panel. Alice, you've done a great job, and I can't thank enough our panelists for joining. Thank you, Eleni, Robert, Jeff, and Joshua. Thank you very, very much to all of you. Great panel.
Thank you.
Pleasure. Thank you.
Thank you, Nick. Thank you, Alice.